So I wanted to spend a couple of slides and tell you what Fico is, and then spend most of these 20 minutes of the business cases that we've seen all around the world and the solutions that we had to build in response to banks' problems in risk management and banks' objectives in their day-to-day business. So I'm representing a company which is currently named Fico. We've been rebranded recently, so probably some of you know us at the name of Fair Isaac. We've been created in 1956 in the United States. And we are named, we are named the leader in analytic solutions for decisions in banking, insurance, in financial industry, in retail, in advising the regulators, and all the domains, even the delivery and retail products, and all sorts of these things. Right now we are working all around the world, and you may see that 9 of the top 10 Fortune companies rely on Fico decisions at some points of their activities. We have lots of statistics, like top 10 credit cards issuers in the United States rely on Fico decisions, 8 of 10 leading insurers use Fico decisions, and so on, but I just won't take your time with all these graphs and how smart we are. So I wanted to show you why we are taking this place and what's the reason for us being able to call us leader in analytics. On this slide, you may see the patents that we have right now. These are all Fico researches, and these are all things that Fico developed. I'm sorry for this. I don't know what's going on with the slides. I'll try to fix one by one. So we started in 1956, as I told, and the more we work, the more patents we have. And for example, in 2014, we already received 70 new patents in United States and worldwide, and all these patents are connected with mathematical, statistical, and analytical solutions which we develop by ourselves, and we implement in our solutions, in our proposals, in the things that we do. So for example, the latest stage that you may see is this century, 2000 something. We were the first ones who created the optimization solutions for banking. We were the first one who started building predictive system for insurance fraud, so we help prevent fraud in insurances. We do offers about optimization. We use adaptive analytics for capturing fraud in all domains, and our main focus is right now on banking. We are the first one who started delivering capacity scores, which show how much of additional debt the consumer may take on before the consumer falls off the cliff and goes into full delinquency on all his accounts. And we are the first one who do the scores prescription adherence, and we help you work with your clients in this domain. Moving forward, you can see main names of our clients who are using our solutions, so you will see lots of names that you know. You see it's banking, insurance, it's retail, it's healthcare, it's government, because we work a lot with the governments. And I wanted to draw your attention that we are already present in Romania. We don't have an office here, but we have a partner here, and our scores are implemented in the credit bureau here, which you may use, and probably some of you who are present here use and in your everyday practices. This is our profile, the snapshot. We are part of New York Stock Exchange. You may see us there. The most important are offices. We're opening at least one office each year in a new country, and right now the last one was opened in, I'm really sorry for that, something's going on. And the last one that we opened was in Istanbul, and we have another closest to your country office, which is in Russia, so we can provide you help 24/7 because we cover all the globe, and plus it's quite easy for us to help you in Romania. It's quite easy for us to travel in here. Probably we are not that big in the number of employees as in comparison to Fujitsu, which I've seen in your presentation. We are much less, but from these 2,400 employees, you must know that 500 of them, they are PhD in mathematics. So these are pure researchers. They're not delivering, they're not selling, they're not lawyers. They are people who work with mathematics and look for the new methods to help predict, assess, and manage risk. I wanted to draw your attention to the last approach that we see all around the world and which made us construct our solutions in a sort of, let's say, scheme or a graph table that you see here. We see that the best option to deal with risk with your clients is look at your consumer not only with the risk view, but see your consumer from all points that you can do. It's 360 approach, we call it. So risk view is the basis. This is the first stage. This is that everybody does, and we use history to predict risk. We try to assess what's the potential of person going delinquent, of person being the fraudster, of person applying to get insurance, and so on. But there are also other views that may help you. Second one you may see is called opportunity view. It's capacity. So there's a question of how capable the person is to take on additional debt, additional payments, additional obligations, to consume even more, because capacity could be also the consumption of some products. Third stage after risk view, capacity tells us the future, but we can have a more enlarged picture of the future. We can have a macro view. We can prognose the economic impact on the consumer. We can use the stress testing scenarios, and we can predict how the consumer will behave in each situation, in each economical case of development of the country. And the opposite side of the economic impact service is the stress testing, which we do completely different from the other consulting companies. We do so-called bottom-up stress testing, when we take each individual consumer and prognose his behavior in different economical situations, which gives us a more granulated view on the consumer and on the portfolio in total. And the fourth one is the trends. It's the other views. It's some additional instruments which can give you a more detailed view on the consumer. We can name here, for example, market performance, so comparison of the behavior of your portfolio, of your consumers pool to the other consumers, or which is not named here, but one of the cases which are quite interesting, collections, for example. We can prognose the collections, the collectible amounts, the ability of consumer to pay you debt fully or partially, or some of this sort. Let me give also you a description of some of the services, of what we have and what we can propose you. So the first one is credit scoring. We are called the leader in world credit scoring, and all bureaus in the United States are using our scores. We are right now presented in 28 countries around the world in the bureaus as the bureau-based credit score. You may see that around 70,000 businesses rely on our scores. It means end-user clients who use our scores in their solutions. And in Romania, we're existing from 2008. We are delivered through the Bureau de Credit, and you can get our scores. And I wanted also to know that our scores delivered through Romanian Bureau are highly predictive and very stable. In comparison to other countries, the behavior of the Romanian population is quite easy to predict. It's stable. We don't see any major shifts from 2008, which makes us quite comfortable, and we have proofs and records and validation results that show that the score is predictive, and its power is it's very, very high in comparison even to the other markets. Next thing that we do worldwide, as it was reasonably mentioned in the previous sessions, regulators and financial institutions, they're looking for common language. We all need a common language to talk to each other, and we need to understand, regulators need to understand what banks or financial institutions are doing, and financial institutions need to understand why regulators are implying these or that regulations. That's why we're trying to become part of it, and you can see lots of names here of regulators with whom we are working. These are European Union regulators, US regulators, Canadian regulators, not named here, but also in our contacts, and we are used as advisors, are Chinese regulators and Russian regulators. And our main approach to working with the regulators is giving the most transparency that we can. So we think that we should disclose as much as we can to the regulator first, so that the regulator would easily understand what's happening with the objects of the regulation. Our main approach is to show the methodology, to train the regulator, to give business examples, and to explain everything that we do from the mathematical perspective. For example, how we build the scores, why we build it, why it predicts the behavior, and from technology perspectives, like, for example, the bottom-up stress testing. We can prove the stress test that we do. We can sign under this stress testing in comparison to other companies which give their results only for educative purposes. We have mathematical proofs that we really perform. Another thing that I wanted to show you a little bit is economic impact index and the solution that it provides. It's giving you more detailed view on your portfolio, ability to prognose losses, ability to prognose necessity of capital today, next year, in 2 years, in 3 years, and ability to react better to macroeconomical situation. There are also so-called custom benefits when you have the economic index, or you can assess the economic impact of the consumer behavior. You can even find those consumers who are more stable or stable in any situation. You can find those who will drop off the cliff in any situation. So you can segment your portfolio in a more detailed way, and that would result in a benefit to the banking. Next thing is marketing and working with your existing consumer. I wanted to show you one of the innovative approaches that we have. It's called action effect modeling. We developed it recently. It's just last year's development. We predict how the consumer will react to a proposal that you give the consumer. So, for example, if you propose me $1,000 as a credit card, I would take it. If you propose me $5,000, I won't, because I'm not sure, or maybe I don't need that amount of money. But the impact on the bank is in capital, because when you propose me something, you have to have capital to propose. And probably, if you know that I wouldn't anyway take 5,000, you shouldn't do this. And this is what action effect modeling shows you. So you may assess the future probability of consumer taking what you proposed, and efficiently allocate your capital today, tomorrow, and not have unnecessary reserves and have some, let's say, free money for some other of your activities. The example given is on banking, but it works the same for insurance, and it works the same for retailers, because action effect models can work in retail when you know what to propose to each person. For example, if you send me the fishing catalog, I won't buy anything. I'm not a fisherman. Last thing that I wanted to cover is fraud. Right now, we are spending, let's say, all of our resources on promotion of fraud, and we have the fraud management system, and we have systems that predict probability of fraud at the stage of application, at the stage of transaction, at the stage of consumer just being the consumer of the bank. And we use all sorts of new approaches that we can have in the world today. So we use link analysis, we work with big data, we do data mining, so we can track consumers between themselves, we can find fraud circles and assess the behavior. Just to give you an example, for example, we recently built a score in Russia which takes in consideration not only the behavior of the applicant for a credit, but also the behavior of all people that are socially connected with this applicant. And we found that really the social entombment of the applicant influences his behavior. So, for example, if there's the family registered at one address and 2 persons of the family is delinquent, it means that the 3rd one will be delinquent quite soon. It helps to capture fraudsters, because we have, for example, in Russia, some villages which are full of fraudsters, but it also helps you to find some segments and even look at the consumer on a higher level. So I've been saying about customer level, not account level, but this one gives you the step forward. It's moreover the, let's say, the social group level. You can assess the family by itself, and it helps a lot with assessing the proper, for example, debt to income and all sorts of other things.